He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
Okay, we are back.
Angry Mortgage is back.
Jan and Ron, because we have to identify ourselves every single time.
You know the little pop-up with like our names?
Don't we have the pop-ups? I don't know.
We'll look into that.
We'll make sure there's a pop-up. Okay, we'll make sure. All right, so we got lots to cover today. We're going to dive right in because so many snarky sons of bitches sometimes put in the comments that we need to less chatter. Remember that guy who said less chatter?
Yeah.
Yeah, we banned him. He can never see the channel again. He's gone. But we are, okay, you want less chatter? We'll give you less chatter.
Isn't it a podcast where we're talking, though? It's a lot of chatter.
That's true. That's true. But like it's wow. Okay. There's all I'm going to say about, you know what I like about Spotify? There's hardly any comments. Right? Like people don't comment on Spotify.
Yeah, I think there's just ratings. Same with Apple Podcasts.
But on ratings. YouTube, there are comments.
People are unhinged. Very
there
unhinged.
Are comments. Like, some of them in a language only vaguely reminiscent of English too. Like they're only getting close. Okay, some of them. Anyway, and some of the crazy investment people. Like everybody should know that there are people who will come on with comments on our YouTube channel, and it's just to sell you bullshit crypto.
Yeah, it's all scam.
It's sophisticated. Like, it's really sophisticated. It goes on to, yes, I agree with your take on the real estate industry, but then it goes long, and then there's somebody else comments, yes, you're right about real estate. How are you doing with investments? We have a marvelous advisor, Janine Krabakel, who is the master, and then it starts. Then the bullshit starts. And the Telegram message and all this. Oh,
Crazy.
My God. It's fucking horrible. All right. So earlier this week, there was the big announcement of the increase from the federal government, big announcement from the feds, finance minister just laying it on. And then she did a video later about herself, like in a young couple's living room. She did a big video, like she's.
I did not see that.
Oh yeah. That's all online. It's all over Instagram, all over TikTok, all over the place. All over. They're on X too. They run videos on X. Christa Freeland's on X. So it's like she's in a living room, like and there's a young couple there.
Is it a dog crate condo?
No. It's like it's like a house. So it's obviously a staged. It's staged, right? I mean, young people in a bungalow or something.
Yeah, sure.
So it's.
I don't see that often, but okay.
Yeah, exactly. So here's yeah. She would never go to the Dog Creek condo. So there's Christa Freeland. She's having this earnest discussion with them, explaining to them how she's gonna fix all of their housing needs through. She has in her bag. She's got a magic wand. But no, I don't think quite like that. But that's the idea. So. Recap, the government increased the cap on CMHC mortgages from 1 million to 1.5 million, even though every association of mortgage brokers, real estate agents, and construction developers in Canada said, 1.25 would be enough. Like they've been asking for 1.25 for 6 years. No one ever asked for 1.5, like never. But government needs votes, so they just jumped it straight.
Yeah.
But anyway. I've had time to think more about it. And by the way, everybody should know there's not a lot of details about it. Not yet. The government promises, the departments who are involved promise more details in the next week or two. So it's
still developing, I guess.
It sounds like the political people in the government just pulled it right out of their ass, and it's going to take some time for them to figure it all out.
I got to give it to their PR team, though, working overtime.
Oh, yeah. Some of those guys can work at light speed.
Yeah.
Everything else is slow as fuck.
Yeah.
But, when it comes to making announcements, there is no better government in the history of Canada at announcements than this government. They are Just the kings and queens of announcements. All right. So, but this will eventually happen. Lots of little details we're working on. Like, is it absolutely just first-time home buyers? Because normally the program is for any buyer as long as it's owner occupied. It's that's normally the criteria. So is this definitely going to be different criteria? There's some questions about second home program, which we don't think is true. We think it's just going to be for the people who are buying it to live in it as their principal residence. We think it's that, but it needs further details. There's a big open space because it really looks like the finance minister is proposing that this will help people who are renewing in Canada. Because if you're renewing, even though we have to fully underwrite, which by the way, I never understood, but we're going to fully underwrite the file.
Yeah.
And we, in some cases, will apply the stress test, but in certain cases where it's an insured mortgage, or we will not. Okay. So will this change the game on that? Because the finance minister in her announcement kind of indicated it would make this available to more people, but we're not sure. It could just be gibberish. Okay. And so there's a lot of details need to be really ironed out. We will cover them as they come up. But here's what I've been able to think about constantly for the last week, last 5 business days. Is this really just a way to push the price of houses back up?
There's so many questions as to who this is really benefiting, in my opinion.
Yes, who benefits?
Because I don't know many people in like millennials, let alone Gen Zs, that are in the housing market trying to buy a $1.5 million home because wages are not there yet for us yet. Hopefully, we'll get there one day, but like, who is this really going to help? Because I don't see this helping us.
So true. Okay, so, the government has avoided
the real problem.
The real problem that the price of houses is too damn high. They're batshit crazy house prices in Canada. They keep talking about affordability, but they simultaneously talk about the price of homes never coming down. They have more and more of their operatives. Like, what's an operative? That's somebody who used to work for the party and now he's got some other job, or she's got some other job. And she's sort of fed talking points to say, like, yes, the high price of homes is a vital part of Canadians' retirement plans. So we can't do anything to slow down. We can't reverse the price of homes. Okay, well, how about just no increase for 10 years then, for the love of Jesus? Like, maybe wages could catch up, right? Maybe. Yeah. Okay, not sure, but... Or
lower development fees, so there's more actual homes.
At lower prices available? Yeah. I mean, like, that's the one thing this does not address in any way is the price of homes. In fact, it's the opposite. It's saying to people, look, in Canada, 1.5 million is the upper limit of a starter home.
The new reality, and that's just sad.
In the U.S., it's 766,000. That's the upper limit for starter home in the U.S. Half of this new number. Half. Okay. So you had that was just a great question. Who really benefits? Like, I didn't go to journalism school, but I've watched a bunch of movies about journalism. I watch a bunch of posts about journalism. And the one thing they say is, they come back to it always, if you want to understand the reason for something that you don't quite, what's the real reason? You do 2 things. You find out who really benefits. Who really benefits here?
Yeah.
And the other thing you do is follow the money. Where's the money going? Okay. So who benefits? So if you're a young person, is it a bet? Because they talk about it endlessly, right? That little video is with people who are obviously young that Christa Freeland did.
Yeah.
And, obviously they talk about first-time home buyers. Average first-time home buyer is not 55. That is not the case, I assure you.
Yeah.
Okay. I've been doing this for 30 years. That is not who the average first-time home buyer is. So if you keep talking about first-time home buyers, you're talking about people, probably age 35 and lower. Okay. And certainly age 40 and lower. All right. So who is she talking about? Who is this affordability for?
Yeah.
If it's a first-time home buyer and they're a younger person, you need to make 300 grand a year to top out on this 1.5. So
I don't really think I know anyone who's making 300 grand a year.
family income, but still, right?
But still, like,
yeah.
it's not.
That's not a big number. It
It's
brings,
not someone you come across often.
No, and it brings in the jeopardy of people considering cosigners, which is something I relentlessly tell people not to do. Don't entangle your parents in your new house. Okay,
Yeah.
if you can possibly avoid it.
Yeah.
But people always say to me, "Well, what else could we do?"
That's the thing. It's kind of like we have no options.
Exactly.
Like, that's unfortunate, but it's like the only stepping stone that we have. If we have parents or a parent who's willing to help in that way.
Yeah. And that is a function. Again, I have to say this at least every second or third show. Traditionally, the metric for people buying houses is that the house price should be about between 2.5 and 3.5, maybe 4 times your income.
Mm-hmm.
So now we've gone from about 8 to 9 times income all the way up to 12 or 13 times income.
Mm-hmm.
Is what we're like. Average income. Average income. Okay. Because let's face it, this program shouldn't just be for the 2%.
Right.
The highest 2% earners, but and yet it is. So, all right. So what your point? Who benefits? Well, is it possible that trying to bring the construction industry back to life in Ontario and BC is that who benefits? Right? Like, because all of a sudden you can now run out and chop all your single family homes for $3 million in half, and you got a shot of getting a CMHC mortgage, right?
Yeah.
I mean, so they must benefit. Does the real estate industry, who's flat on its back with some of the lowest sales in a quarter century, do they benefit? Quarter century in Ontario. Real estate's in tough shape. Do they benefit? Yeah. Anything that sort of brings their incomes back to life is a benefit. But maybe it's the politicians who really benefit. Maybe it's their attempt at votes. Yes, their attempt at votes. So, because the question we ask is, anything that makes it easier to buy this incredibly expensive houses that are over $1 million.
Yeah.
Whether it's a semi, whether it's a townhouse, even a big condo, maybe even a big, like 800, 900 square foot condo, good size, like comfortable. People like to have that over $1 million. But like, is it designed to support the fact that these prices are too high?
Yeah, that's a real question.
It's the deep, dirty question of the whole thing. And I've looked at it every direction, and my considered opinion is that the only thing that helps any young person in Canada to better afford a home is having lower priced homes. Mm-hmm. And I don't see it any other way. Right. So I'm not sure how making it easier to buy a more expensive home, I'm not sure that helps in any way.
It's just providing more generational debt at this point. But going back to the politics things, I think, like, statistically, most like voters are homeowners versus renters, correct? Am I wrong?
Well,
there?
I'll take it even a step further, because that's a fantastic point. It's like this. People over the age of 55, it even goes crazy when it's over 60, but people over the age of 55 vote in elections 40% more often than people under 35. So if you're a politician trying to figure out who is the key voting group that I need to worry about, it as much as they pretend they're here for young people,
that's their real target market. Is
boomers,
yeah,
and people over 55, okay, because they're the most consistent voters, okay, which is horrible that you would want to look after people who've done fantastically well on their real estate already at the expense of people who are just struggling to own a home.
Like, no offense, no hate to older people, but you guys
if you want to hate older people, you can. I don't care.
No, it's just you guys.
I hate some older people, so there you go.
You guys have had your chance. You've had your future. At this point, 55, 60 years old, there's not much that's changing in your life versus 30 years younger. We're getting educated. We're starting families. We're moving. We're doing whatever. Like, this is who they should be focused on. People who are making decisions on whether or not to live here and make their future here or leave.
Have kids, raise families, all in all.
All of that.
All
that fun
all
stuff.
of that. Yeah, to just support the people. By the way, support the people who have done phenomenally well in many provinces on the houses they bought. You know, like done very, very well already. How much more help do they need? For the love of God. Anyway.
That's true.
So other action this week, and it was a week full of action. We got an inflation report in Canada, tremendously down. Like that was way down. And we got a probably the most important thing of all. The U.S. Federal Reserve, chairman is Jerome Powell of the Federal Reserve. Now, everybody, if you're like a hip financial bro, you say...
J. Powell?
J. Powell. J. Powell. That's J. Powell. Big announcement. J. Powell came out with... Okay.
Reminds me of J-Wow from Jersey Shore.
Jersey Shores. Oh, I watched half an hour of that once and shut it off. Oh, that was so much.
Too many brain cells just burning at once.
My brain was being liquefied by that show. I mean, what was the guy's name? The Situation? Your nickname is The Situation? Like...
Listen, brain rot.
That is
That's
fucked
what it was.
right up. I'll tell you. Like if anybody, who is the star of the show? The Situation. No, I don't want to see that show ever in my life. Okay, yeah, I did hear about it though. Okay, so yeah, we got Jay Powell in the States, Jerome Powell, the chairman of the Federal Reserve Board. Hey, he cut 50 basis points, a full 0.5%, the most aggressive cut that he could make in their interest rates, in their bank, effectively Bank of Canada rate. So I'm sure Tiff Macklem just, he either went out and, locked himself in his personal toilet of his office or wherever. He just locked himself in the stall and just did a little dance, like this little Tiff Macklem beaker jig. Okay, you just hear him. You just hear him. I can hear him now. Like, oh, he saved me! He saved me! Oh, my buddy Jerome saved me. Okay, it's kind of curious. Like 2.5 weeks before, they'd all had a meeting in Wyoming.
Yeah. Okay,
in Jackson Hole, Wyoming. So I guess they talked about it and figured it all out. Okay. Anyway, look. What's it mean? Well, if the U.S. is, and by the way, when Jerome Powell announced something, when Jay Powell talks, people listen. Okay,
yeah.
He even said we're going to keep cutting. This is just the beginning. Okay,
that's
like
helpful.
Sweet Christ on a cracker. I mean, that's about as good news for Tiff Macklem as you could ever have at the Bank of Canada. Like, no currency problems anymore because I've had to read this comment about 380,000 times in my social media posts that you realize if Tiff Macklem cuts the rates, then our currency will suffer. Yep, you are the 383,000th person who said that to me. And
we're already suffering.
Guess what? The currency has not dropped at all in 6 months.
At all.
Not at all. But this means it won't. Okay, This means that was 73 cents 6 months ago. It's 73 cents now, U.S. That's where it is. Okay, a little movement up and down, but sweet. I mean, come off it. Okay, like it ain't 65 cents. Jesus. And now that we know the U.S. is cutting, our cuts are locked in. Their cuts are locked in, and the only place to go for prime rate, variable rate, and a little bit on the fixed rate side as well, the only place for rates to go is down. So I've got to do my constant message for the last 6-7 weeks to everybody out there. Stop taking 3-year fixed. Stop taking 2-year fixed. Stop it. Okay?
Public service announcement.
My public service announcement. Stop. For the love of God, stop. All right? Look. Covered it before, briefly hit on it again. There's only 2 moves in mortgage rates. There's offense and defense. Offense is variable because you know it's coming down. Some people can't handle variable. But real defense is 5-year fixed. 5-year fixed come way down.
Yeah.
5-year fixed, it's not fully available everywhere yet, but there's 3.99 high ratio 5-year fixed rate, under 4%. We'll see a ton more under 4% the next 2 weeks. So if you want defense, like if you want to say, I want a good rate and I want to not to have to worry about it for as long as possible, then don't take a 3-year, for Christ's sakes. Take a 5-year. It's less than the 3-year, or the same. And if it's the same, why not take longer? Come on, like
you're already there. You might as well.
More defense, right? That's what it is. And but take variable, for the love of God. Like, oh, but Ron, the variable is higher than the 3-year fixed. Yes, I know. Just wait a minute. Yeah. Okay, like by June it'll be like 3.5. Okay, like relax. I mean, it's coming down. It is what it is. How can you be sure? I mean, we're taking a lot of risk there. Well, then don't listen to the podcast, for the love of Jesus. Like, I'm supposed to know some shit. At the same time, I'm angry at you. Yeah. So that sums it up. Angry mortgage right there.
I think that people are probably just really traumatized when it comes to variable.
I don't blame them. I don't blame them a bit. But for the people who've gone through the trauma that are finally starting to see it change.
There's a light at the end of the tunnel.
And it's not a train. It's like literally lower rates. It's literally lower rates. Now, one thing I haven't touched on as much, but I got to touch on today is, what about the people who locked in to like a fixed rate term for 3 years, 4 years, 5 years at the worst time, 18 months ago? So some of those people have got 619, 639, 649. Whoo-wee, that is fucked up. I mean, that's...
What would you recommend? Like, let's say their penalty isn't that bad. Would you recommend that by the summer they just kind of break and lock in again?
Their penalty is bad. Like there's no easy way of saying it. I mean, particularly if it's 5-year, if you took a 5-year for 649, that penalty is going to be a bit of a ball buster. But it's all about two things. It's all about what your existing financial position is, and it's about the actual calculation of the penalty, which the banks make it hard. They make it hard. They say, well, we can't tell you anything today. You have to officially ask for a discharge. Oh, well, how about you fuck yourself, banker? I mean, like...
you have the right to know.
I have a right to know. You can give me an estimate. You can say, yeah, he wants a discharge next week, Friday. Here, we'll get you a number. But you have to promise to discharge. I won't promise you anything, banker. Yeah. Like, just give me the goddamn number. Well, it's very complicated. It takes us a lot of time. That's why I got my mortgage from you, so you could look after me, you son of a bitch, okay?
Exactly.
Like, just do what you're told, for the love of Jesus, okay?
Doesn't always have to be transactional. It can be a consultation, right?
Not just that, but I'm your customer. Do I have the right to know? I'm not even telling you. I'm not even asking that you to be perfect, okay?
Rough numbers.
Or, as long as let's just assume, if I broke it next week... on Friday, if I broke this mortgage next week on Friday, what would I pay as a penalty?
Yeah.
Okay. And then I can't hold you to it. I know, because I'm not breaking it next Friday.
And you didn't sign anything either about breaking it. So.
Nope. But just like apparently you banks have a lot of computers and shit. Or I see over there on somebody's desk, there's a calculator from the Stone Age. So like, can someone not figure this out? How hard is this? Yeah. Okay. You should know your own policies, right, bank? Okay. Like,
wouldn't it also be like in the documentation that I guess it differs because the mortgage goes.
It differs because the numbers always relate to the rates today. So it's a calculation based on what today's rate is. So and by the way, I've read the calculation. The calculations are in the way it's calculated. The way of the calculation is in every mortgage document. If it's in the huge document, you sign at your lawyer's office, or e-sign or DocuSign or whatever it is. Or maybe you're on Zoom call and DocuSign, but it's there. The documents are there. And the long story short is that sometimes it's 15 paragraphs to talk about how the calculation is arrived at.
A lot of jargon.
A lot of complexity, yeah. There's some that are very complex, not easy to understand, and always require inputs from today, like today's information of where rates are, or where posted rates are, or where rate discounts are applied, or on and on and on and on. So, yeah, not easy, but possible. It's possible. Like a bank can, if you say to a bank, if I paid my mortgage off next Friday, what would be the penalty? And that gives you a reasonable idea. So get that information, analyze the savings. But folks, I had a guy argue with me about that online the other time. I said, wait till the rates are lower, because that's obviously the time to strike, is when they're as close to their lowest point as possible. And the guy says to me, no, you don't understand this. The way interest differential penalties work, the more the rate goes down, the worse the penalty is. Okay, fuckball, by that logic, we should have converted when I had a 649, I should have converted at 639, right? Yeah. So I'd have the least penalty. You dumb fuck in your stupid comment. Okay,
probably not a mortgage broker, so
no, half these guys are mortgage brokers.
Oh
you
no,
know?
that's so concerning.
Let me well, I'll tell you what it is all about. It's all about that those guys are out pitching refinancing now. They're saying I'm just sweating because I haven't made enough money for the last year, and I'm now going to start pitching refinance. And when anybody asks me, well, shouldn't I wait until the rates are lower? And the Butler says the rates are going to be lower in the spring and stuff. Oh no, Butler's a fat fuck. He doesn't know what's going on. And really, if you wait and the rates go lower, your penalty goes up. So you should come with me and refinance now. Okay, yeah, fuck you all. Okay, look. What I'm saying is in as clear a voice as I can. Yes, folks, if you have this ridiculously high 6.49 fixed rate and rates are coming down to 4% or less, wait till they get to less. Wait till they get below 4%, first of all, and then check the penalty out.
Yeah.
That's the key. Check the penalty out. Don't, that's the real answer. Like if you have, and no matter how hard it gets, press your bank to supply it. And then, okay, I'm going to save X amount of dollars in the first year by going with a lower rate. The penalty is Y dollars. Oh, look, I'm still losing.
Yeah.
Okay, but what happens in the middle of year 2? Now I'm break even. Okay, so it's not hard. Like you might need some help, and mortgage brokers are here to help. But we can show you the math. Simple as that. Okay, we got mail. We got questions that need answering.
Yes. Okay, so this one says, when prime rate went up, my payments eventually went up. Now it's coming down. Why aren't the payments coming down?
I'm getting a lot of those questions online. Tons of those questions online. It's really interesting and basically sad. Let me explain. So it's easier for me just to use the example of one bank. First of all, I'll tell you there's two big banks that when the rate goes up, your payment goes up. But when the rate goes down, your payment goes down. I'm not telling this is not gossip, this is just fact. Those banks are Scotiabank and National Bank. Okay, if your payments go up, if your interest goes up on the variable, prime rate goes up, your payments go up. Prime rate comes down, your payments come down. It's about a 3-week delay, to finally get all processed. But yeah, so if you're with variable at Scotia or National Bank, by this summer, your payments are going to be substantially down. Okay. Now let's take another example. I'm just picking on one because I'm not going to do the calculation for all of them. Yeah. So let me pick on Royal Bank because it's actually a lot of people have Royal Bank mortgages, and it's a good example because it's easy to understand. Okay. So Royal Bank says that when you have a variable rate mortgage, you have a variable rate mortgage, that we will never allow the mortgage to go into negative amortization. So what that means is we will never allow the interest on the mortgage to exceed the payment. Wait a second, how could that happen? You say, well, if you started at 1.45 as a rate in 2021, and by like the first month of 2023, it was 645, 145 to 645. Sweet Jesus. I mean, big jump. You're in trouble. Yeah. And you might find that your payment, you might be paying $2,000 a month. When you started, you're paying $2,000 a month, and about 800 of that went to interest and 1,100 went to principal. And now 2,200 goes to interest, and you're only paying $2,000. But with Royal, here's how Royal works. As soon as you start to not pay interest as soon as your mortgage starts to grow. They say, nope, we need to increase it enough to pay all the interest plus $5
Of principal.
of principal, right? So it's you're never going backwards.
Yeah.
Never going backwards. So that's a
Yeah.
very easy calculation to understand. Okay. It's by the way, it's a good one. That's a good system. Like, who the hell wants their mortgage to grow? I mean, like, it's nuts. So by all means, a lot of people with RBC variable, their payments have gone up. Some of them I've looked at their examples quite substantially. Okay. Just to keep up with the interest rate.
Yeah.
Here's the bad news. Under RBC's system, they don't go down. They don't go down.
Yikes.
So yeah. So if that's your answer, that's the answer. If you're with RBC, and to a certain extent it's true at TD, certain amounts true at BMO, true at CIBC, when the trigger mechanisms within those contracts force the payment up, there's no clause in the contract that says, well, we'll let them go down again.
Yeah.
Once they go up, they're up. That's
So
it.
then what would you do in that case? Like, if you, let's say they went up to a point where you just can't make those payments.
Good. That's when you got to go to the bank for intervention. So you have to, and the only way to do that is to increase amortization. I mean,
Right.
Because it's. I don't think the bank has any mechanism where they can just say, yeah, let's just change it. What the hell? No, you have to appeal from financial hardship, and you need to say, look, I'm at 27 years now. Can I go back to 30? I'm 22 years now. Can I go back to 30? And that will reduce my payments. Okay. So,
Good to know.
But the way those products are built, once they're triggered, once the high rise in interest triggers them and the payments go up, there's no automatic mechanism for them to go down. They won't go down.
Got it. This one says, what should I think? My renewal is next month and my bank recommends 3-year fixed. Butler keeps saying variable. Who's right?
Oh shit! She just this.
Who are you asking?
This
Obviously, Butler.
This person has listened to all of my shows in the last month and a half. Yeah, I mean, I can't explain to you why they're offering 3-year fixed, except maybe that's what they've been offering lately, and they just got in the habit of it because there's no rate logic behind that. Okay, now let me say this. In the general scheme of things, in normal times when there isn't a big bank mortgage rate war going on, banks tend to make more money on fixed than variable. It's also a stickier client because it's typically a bigger penalty than the guaranteed 3-month penalty, because that's all variables, only 3-month penalty.
Yeah.
So you can even just take your pocket calculator. Oh, sorry, your phone. Shows you how fucking old I am.
Calculator?
Yeah. Jan's looking at me thinking,
Was it attached to a
fuck.
chain?
Yeah. Was it attached? Did you have a belt with keys and your pocket calculator on it? Yeah. Like fuck, like you were some shit kicker with cowboy boots on. We love everybody with cowboy boots. We're not beating up. We love cowboy
boots.
You like cowboy boots?
Yeah. I want to go to the Stampede. But anyways.
I've been to the Stampede. You'd love the Stampede.
Yeah.
Stampede. By the way,
that's
such a good time in Calgary. It's not just the Stampede. Like every bar is open, happy hour. People are drinking nonstop. There's music everywhere.
Sounds like a
it's
time.
just fucking. It's a lot of good fun.
Cowboy hat and the cowboy boots. I'm there.
Okay. So all right. So I take back all my shit kicker talk. I don't think I can really walk it back. It's too late. But we're not going to edit it out. But like, yeah, you. Yeah, that's
pocket calculator.
There's the pocket calculator bullshit. I mean, holy moly, that's old school. Anyway, you can take out your phone. If you want to know the penalty on a variable, you can take out your phone and just multiply it out in 3 functions, and there it is. So simple. Okay.
Yeah.
So, but it's less. It's generally always less, like 99% of the time, less than the break penalty on a fixed rate.
Yeah.
And at the end of the day, the banks are more attuned to fixed rate. They'd like it's a little stickier, stays on their books longer. Banks like everything that stays on the books longer, that's longer duration loans.
Right.
Banks want that. So that's the reason why bankers typically recommend fixed rates. One of the reasons.
Yeah.
Sometimes it's also a great strategy. Like right now, like I said, it's only 2 things: 5-year fixed, variable. That's it. So, okay, 2 good questions. I'll give a quick clear drage update. For those of us, you remember Claire?
Yeah, promissory notes, right?
Promissory notes. People losing millions and millions and millions of dollars. All right.
Please tell me they found some money to give
Found
to the people.
fuck all no money at all. Okay, so
Sneaky lady.
something really wrong about what happened. All right. So let me tell you, quick drink. Let me tell you what happened. I'll sum it up quick. Claire Drage was a mortgage broker out of Burlington, Hamilton area. Longtime mortgage broker in Ontario. She was a big believer in private mortgages for construction. She brought in huge amounts of people to say, hey, give these guys a private mortgage. You're going to make 9%. You're going to make 10%. And then
be your own bank.
Be the bank. You be the bank. And when the house is finished, they'll pay you off and you got nothing to worry about. It's all going to work out great. But it didn't work out great. She fell in with a bunch of fucking crooked fuckwit nincompoops who... That's a word you ever hear? You know,
I have heard
you have heard that word? That's an old word.
In cartoons.
In cartoons, yeah, like old cartoons, right? Like the Looney Tunes cartoons. Yeah, I know. Once in a while, Bugs Bunny called somebody, oh, who's Bugs Bunny? People are asking out there, who is Bugs Bunny? But,
I loved Bugs Bunny.
so people people in their 20s and early 30s know who Bugs Bunny is, right?
I think maybe 25 and above.
So the cutoff's 25. If you're
so.
younger than 25, it's just SpongeBob and fuck it, right? That's it.
Probably.
That's
yeah.
it. Okay, I got you. But yeah, nincompoops. So like, it's like these are like literally a clown show of assholes. Were the developers she was working with, like people who knew sweet fuck all about developing construction or anything. Just a gang of fuckwits riding back and forth to Vegas on private jets, having. Fucking
wasting other people's money, basically.
Yeah, with the Bolivian marching powder and strippers and the whole 9 yards. So like the worst people alive. Okay, so that was your idea of a good construction development company she was supporting, and that sure as fuck didn't work out. And then so bottom line is she attracted massive amounts of money. She attracted massive amounts of money to this project. 430 homes. Okay, a lot of them. Private mortgages, she'd do first mortgages on the properties. And then to renovate, she would do promissory notes, which was just her signing a pinky swear on a piece of paper that, you'll get your money back someday and I'll pay you 10% or 11%. And the whole thing went into receivership. Every one of the construction operations by the cocaine-addled bastards, I mean, they all went broke, okay? And all of it went into receivership. And here's the thing I learned about just this week. There's something called a court-appointed monitor for this stuff because it's really confusing. Like there's multiple development companies with interrelated people on the ownership of these companies, and some of them had gotten promissory note money, some of them had mortgages, and then but they all are the companies that owned the homes. Remember, they're going to renovate them, fix them up, sell them, right? So. And Claire had done all the mortgages. She'd done the mortgages, she'd done the promissory notes, she'd done it all, and made obviously big fees every time she did a transaction. She'd put fees in her pocket. So one of them comes to me and says, "This monitor, we got the monitor." So I said, "What's the monitor all about?" He says, "Well, because it's such a confusing mess, and there were dozens and dozens of people filing eviction notices, like filing power sale action, foreclosure, to try to get the money back out of the mortgages. And then there were all the people with the promissory notes who were pissed off that the money seemed to be gone, that the receivers said, wait, stop. All of those power sale act, all of you people who gave a mortgage and your name is on the title of the house, stop. You can't do the power sale anymore. You can't try to get back your money."
No.
Well, the idea is that the monitor is going to get it all organized and straightened out, and and so that one of the people doesn't benefit over the other people, and to try to make sure there's maybe a sliver of hope for the promissory note people. Just in other words, and by the way, there's some creditors. There were some people who did work on the homes that were never paid. So there's all this confusion to try to manage.
Very messy.
Very messy. So the monitor, and some of them stopped. One guy had a power sale action. He was going to get possession of the house a week away. He was a week away from getting possession and trying to get his money back.
Yeah.
And the monitor just said, "No, all the money you spent the lawyer, gone. Okay, we're in charge now."
Oh my God.
So what the monitor has found out is, of course, what we already knew, that all these fucking supposed renovations and improvements mostly never fucking happened. Didn't fucking happen. And okay, so that's a disaster. But now I just want to throw a little bit of shade on the monitor. I won't mention the company, but they're saying it's going to cost at least $15 million to them to sort the shit out. Like, weren't the people better off with their power of sale actions? Yeah. I mean, like, you know.
And was this like a mandatory thing, or that the monitor got involved?
The monitor calls the shots, appointed by the court with a lawyer, another lawyer who's going to make $1.5 million, who's in charge of watching the monitor to keep it legal. But now we got all these millions and millions and millions of dollars going to administration, for fuck's sakes. Okay?
Haven't these people been through enough?
But that's our system. I mean, that's the fuckery of
that's fucked up.
Canadian things, that we are very happy to pay accountants and lawyers, and they get paid. But the people who put the money in as investments will pay you last.
Yeah.
After we all get paid.
That's not right.
It's the world. It's where we are. So.
Yikes.
The lesson is, as I've said 1,000 times now, you got to be so goddamn careful. If you hear about people getting a promissory note, just tell them to stop it. Just don't do it. If it's a construction mortgage, just say, look, I hope you're dealing with the most reputable broker you could ever imagine. Okay, and
do your research.
Do your research, guys. Do your research. All right. Well, now it's our favorite part of the program.
What the actual fuck?
Yeah, like, what the actual fuck is wrong with the government? Okay, so I'm just going to give you one example. I don't even actually blame any of the people in the organization. I don't blame any of the workers. Like I'm going to start to emphasize this. Like, sometimes people say, Ron, you obviously hate CRA because you keep talking about how there's more people in CRA than there is in the Canadian Armed Forces. Like, and that's fucking nuts. Okay. I don't hate the people.
Of course. Okay? They're just doing their job.
They're hired to do a job.
Yeah.
They hired way too fucking much of them. Okay.
It's not their fault.
And they're very poorly led.
Yeah.
By the way, I sometimes get little DMs from guys who work at CRA and said, hey, man, if you knew how fucked up it is here, we could do 3 shows. Okay.
Yikes.
Like, they talk about things like the managers don't know what they're doing. And that literally everybody is new. So the training's shit. The job is random. It's such a bunch
of headless chickens.
Such a list of fuckery. Okay? Like, I do get those DMs. But we're not mad at any of those people. Look, if you're hired by the government and it turns out the managers and the minister and the deputy minister and all the people at the top are fucking terrible at their job, that's not your fault.
It's going to trickle down.
It's not your fault.
Yeah.
Not your fault. Like, let's face it. We've all met, like 90% of the time in healthcare, maybe not 90, but 70%. I mean, we're pretty grateful for good healthcare people, right? And they work for the government. So, like, there's just lots of good people. There's a couple of people at CRA I'm not too fucking crazy about, let's be honest. But, like, no, they're just people doing a job. Yeah. And now my new discussion is something called FinTrack.
Yeah.
So FinTrack is the anti-money laundering agency of the federal government, which is, I guess, a useful thing. Although I'm hearing some noises that they've been doing this for like 14 years and nobody's been arrested yet. But anyway, we'll get to that another day. Do some more research. But anti-money laundering, that's FinTrack. And anti-money laundering, FinTrack, and now mortgage brokers must participate in FinTrack. We never did. Main reason we never did is we never take any money from the public, right?
Right.
We either get paid by lawyers or we get paid by banks, typically. But the average public never hands a mortgage broker, hey, here's my deposit check. No, we don't want your deposit check. We're not taking any checks, okay? So now, private mortgage administrators do take money. Yes, they do, okay? But for some reason, FinTrack decided they needed to see all the mortgage brokerage stuff. So we were told 9 months ago, It's coming. It's coming. The deadline is October 11th. You got to be ready. And so for the last 6 weeks, we have people running around saying, okay, you better get going. Hey, I want to sell you a course. Hey, you better take my course. Hey, come and take my webinar. Hey, pay for my new service. Hey, pay for my income verification. Hey, pay for my credit system that's going to verify jobs. Hey, ID. Hey, I got an ID system. Pay for that. Come on. Pay. So my compliance officer, my compliance boss has been, and you know her, she's fanatical, okay? So she is constantly emailing FinTrack and trying to apply, because it's October 11th, right? We're running out of time.
It's like 2 weeks from now.
2.5 weeks, okay?
Yeah.
She sends email after email. Hey, I registered on the portal. Literally this morning, okay? Comes that back to email. Hey, yeah, we know that. First of all, we got an email yesterday saying, you're applying to the wrong thing. You're not a currency dealer. She says, I know I'm not a currency dealer. I've been applying to the mortgage. Turns out the mortgage was getting routed to the currency dealer thing. So somebody was, actually, there's some good people there. There's a woman phoned her and explained the whole thing, and she got an email. And the simple story is this. Even though they set the deadline, the bosses set the deadline, October 11th. Oh, no, we're not going to be ready for October 11th.
Oh.
We're not even going to be able to take your application maybe till October 11th. We're never going to be able to work on it. No.
So where did this deadline come from?
Well, it came from some fucking boss like 9 months ago, okay?
Well, shouldn't they be ready then if they had a deadline for us? And shouldn't they be ready for this deadline?
The woman who called was very apologetic and said, so sorry, but, it's just not ready yet. So what the actual fuck is government, bosses, the bosses in the government, the ministers, the deputy ministers, the directors, the bosses, you bosses. Fuck you all, okay? Like, fuck you all, okay? Like, you don't know shit from Shinola for the largest extent, okay? And it's a piss off. It's ridiculous. Bosses set deadlines. Don't give enough direction. Don't give enough time. Don't hire enough people. Don't prepare. Don't get organized. Basically, they have 835 meetings to decide when the next meeting is. Okay?
Yeah. Oh,
and
no.
fuck all happens because they don't have enough actual workers, or the workers are not given the right direction. And here we are. October 11th. We can't take your registration. We're not ready. So, all right.
Yikes.
Government, smarten the fuck up. See you next week, guys.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.